Welcome back, ladies and gentlemen. Allincrypto here, and this is going to be another daily cryptocurrency market update that we're going to be delivering for you today. If you are new around here, every single day at 1 p.m. UK time, we release an update just like this one to help you stay up to date with the latest and greatest things happening in the crypto space, but also the broader markets, and that's exactly what we're going to be doing this video. We're going to start off with Bitcoin and the Bitcoin chart. The downside on the short-term scenario looks a lot less likely given the strength that we've seen for Bitcoin. We will be covering that. Then we're going to be moving on to a potential risk-on period that we may have ahead of us that's largely going to crater around the dollar. But we're going to be reiterating that. Then we're going to be looking at the Fed fund rate. We're going to be looking at CoinShares inflows, their kind of products, and the fact that we're seeing inflows come in. We're going to be talking about the week that we have ahead from you from a macroeconomic data point of view. And then we're going to be talking about gold, which is largely going to tie in with the Fed fund rate and actually how the markets react to hiking. It's very interesting to me that with every market move that we get, certainly towards the upside, the bears change their narrative and reasons for being bearish. And this isn't to say that they're wrong. This is just an observation that I think is rather interesting. Whereas our bullish stance that we took at the start of the year, and we've got many altcoins that are doing spectacularly, some actually outperforming Bitcoin, even in this sideways environment that we've seen for Bitcoin, where lots of altcoins have gone on to put in new lows. Some altcoins that we hold in our portfolio are doing spectacularly and are up significantly. You want to find out what they are, please do consider becoming a Patreon. But you've got this kind of real interesting thing happening, whereas, and we see it in the comment section, we see it on Twitter, the bears consistently seem to be changing their narratives to why the market's going to crash. It was Silicon Valley Bank, now it's this, now it's the stock market, now it's, whereas our reasons for being bullish and long from a spot point of view simply haven't changed since the start of the year. And actually, instead of having to change our reasoning, we've had confirmation from the broader markets. Stock market did very well, gold did very well, and is likely to continue to do well along with the stock market, even despite the interest rate hikes, because we know that interest rate hikes have actually typically been bullish for the stock market, which sounds completely contrary to the kind of main narrative that's out there. But I find that very interesting, and I think that that's very telling. And the recent one is, the stock market, and we'll fly past the stock market, is about to crash. And we simply don't see that. We don't think the environment is one that is going to spawn that just yet. We think a crash is coming, but we've likened where we are today to the sort of 2006 period, 2007 period, and actually the dollar and where it's potentially at may support our thesis on markets moving much higher. And certainly the crypto market is doing quite well. You are likely going to see a repeat of what we saw at the start of the year for altcoins. They will start to outperform Bitcoin. We're looking at things like other dominance, which I don't really see anybody else covering. And of course, Bitcoin dominance, which is showing a bit of a divergence, bearish divergence in regards to where it's at. So we've got a lot to get through. I don't want to continue to ramble on, but we are back. We are going to be doing more regular videos and, of course, an evening video. So do watch out for those. Let's get into the video, guys, and what we've got to cover today. So the Bitcoin chart looks great. We are teaching stage analysis currently, which was a method that was created by Stan Weinstein. And it's a great one. It's an amazing investment technical guide for new investors. And actually, it will allow you to outperform your peers because you'll be able to invest based on the charts. And we would now, and have been calling this a stage 2 breakout, really since March and these retests. And now we're asserting, we obviously know there's a lot of ETF sort of news and rumors and rumblings within this recent move. But things look pretty darn good. You have broken out of your resistance. You've retested it. Not only did you break out of it with volume, you've retested it and you've seen volume come in. We've seen volume last week. And we do now assess, not just based on this being a stage 2 and a likely uptrend, based on technical targets and based on our overall macro thesis that the markets are actually going to do well in this environment, which we'll cover, that you could now be starting that next up leg. And altcoins have acted in the exact same manner, just to overlay one, that they did in the, we use ADRA, prior, and we'll get it on log, bear into the start of a bull market. You can see they went in and put in lower lows, whereas Bitcoin didn't. But once it reasserted, they really got going. We are potentially at that turning point. And we have been speaking now for a while about a potential risk on period. Now, this is important because this gives us a broader context of the markets and where they currently are. We know that markets are very correlated with the dollar and the strength or weakness that it sees. Typically, when we talk about risk on, that is going to be a time when the dollar, in the current conditions, doesn't do too well. If you look at where the dollar started to roll, it was really where the markets started to turn. Obviously, somewhat barring the debt market, which is very sensitive to interest rates, and of course in a very interesting position. But the flip side of that could be why gold's doing so well and historically does well under this, and the housing market, which are very interest rate sensitive. So we're going to take these off. You can see dollar down, risk up. The risk assets really started to run into trouble with this recent move from the dollar, which has largely been enthusiastically driven by inflation fears. Now, we have speculated, and we're one of the only people to do this analysis, that the dollar could be running out of steam. And actually, if you look at this, and we'll get rid of these, we are, first of all, just from a simple market and Dow theory point of view, seeing a lower low and a lower high and a potential topping out for the dollar. The real kind of level, I think, to watch is going to be around about 105 and a half, basically. You drop that, you are breaking this support, and you're going to see that further downside. That's going to correlate with risk generally doing quite well, perhaps barring the debt markets, which we're highlighting here with TLT, and potentially housing, which is very interest rate sensitive. We have also looked at the dollar. This is the Dixie we're looking at against its other currencies. Let's take these off once more. You can see they are at resistance levels. This is the Japanese, this is the yen. We looked at all this yesterday. So you potentially are looking at a risk on period that's going to be driven by dollar weakness. We've got lots of data coming out this week in regards to inflation. Lots of PMIs in Europe, in the UK, in Australia. We've got CPIs, Bank of Canada rate decision. They're all expected to hold rates. I think this has a lot to do with the bond market, ECB rate decision. We've also got a lot of company earnings, which is going to be interesting for the stock market. Now, the stock market, talking about risk on, risk off, and this is a reason now people are bearish. Again, it changes all the time. That it's my belief that you should change your stance when you're invalidated. Don't just change it based on the recent movements and latch yourself onto something because you've got this overall belief of where you think things are going. Be data driven, be evidence based. If you're saying that rates are bad for the markets, show me the data that suggests that. Actually, cuts are typically bad for the markets. And we're one of the few people that understand this as a crypto channel. In life, and this is really interesting, we essentially are the result of experiences and how we've synthesized them. And I've lived in many different places, and they say travel broadens the mind. I find it very interesting that, and this is applied to the markets, that wherever I've lived, the people have generally been the same in that one area, but very different compared to different areas. And it's a result of them synthesizing the way they've been brought up, how they've lived, and so on and so forth. And people create a narrative when it comes to the markets, like rates bad for the market, and then they'll latch themselves onto anything that could support that. Even if it's very weak, and even if the thing that they were using to support their argument beforehand was invalidated. Always be radically open-minded. Ray Dalio talks about it a lot. It is the, I think, best way to tackle life and the markets. But, things don't look too bad at all. If we're going to get this risk off period or on period for the dollar, for risk, which could be spurred on by the dollar coming down, Bitcoin, crypto's all front running it. Risk may turn. Talking about stock market, which is actually where I was going to go to until my brain wandered all over the place. Not sure what kind of draws we've got on here. Let's go for a weekly chart. You could still be looking at, it's not a great candle. We still have higher targets for the dollar. We did look, you had these sort of wicks here at the same time the dollar was basically doing the opposite. You could just be looking at a retest here, which is actually very normal and very healthy. You get them all the time. For example, Microsoft did it, had a run, came back for a retest. Stocks don't look too bad, in my opinion. We've still got higher targets for the NASDAQ. Just like you get a retest on the breakdown, you get a big move, breakdown, and you come down. You can get the same thing on the flip side, but stocks are at a kind of make and break point. Earnings they didn't do too well on, but there may be a turning of this, and this is going to come with risks broadly. Gold doing absolutely fantastically. We think gold's in a bit of a bull flag. This actually could be supported by historically what gold has done on interest rate hiking. Interest rates go up, look at gold. Gold's in. Let's just do this to reiterate this again, because this is so important to understand this. We're going to put vertical lines at every point, we're going to get rid of this, where rates have gone up. S&P's in baby blue, which we're going to change because the OCD and dyslexic in me is just going crazy looking at that. Look at this. Gold, perhaps you could say a bit of an anomaly, but certainly the stock market, every time they've upped interest rates, the market's gone up. This is not the narrative over the past 40 plus years. This is not the narrative that has been given to you. The narrative that gets given to you because it sells is fear. Actually, look at how gold did the last time they upped interest rates. The last 2 times. Kind of setting up to do a similar thing, certainly with what is potentially a bull flag that's going to take you towards 3,000. S&P usually goes on and puts in a new all-time high when they up interest rates. Into a crash. And this is the thing, and this is why we continue to reiterate the fact that rates lag. Our bigger term timeframes match up with the smaller term ones and all the technical analysis that we have. So the macro thesis that we have aligns with the technicals. And when you get a marrying of fundamentals with technicals, you know, and all markets are as a probability-based game. You place your bets accordingly. I'm rambling on now, guys. Let's get through what we've got to go through. Very interesting how we're seeing, this is the BRICS nation. The dollar's actually never been in so much demand, which I find ironic. But the BRICS nations are loading up on gold reserves. So are most banks, obviously with what's going on with bonds. And actually, we think the fact that bonds are going down is likely spurring on the risk markets. This is CoinShares Trust. We're seeing more inflows. Institutions really seem to like Solana. Remember, we were calling, and we did a lot of analysis on Solana. One of the few people to actually be bullish on Solana, despite the FTX thing. You know, we were looking at this essentially taking place. It's done well. You ran into support. You did basically a head and shoulders. And then you do this thing where you basically nestle. You have this nestling head and shoulders, and there'll probably be a higher target up for that. The week ahead, like I say, you've got lots of PMIs, you've got CPIs in Australia, rate decisions, all sorts of things. We're going to be watching it. Lots going on for other nations that currencies make up the basket that's against the Dixie. So that's going to be interesting. Is that going to support our dollar down thesis? Potentially. Obviously, where are we wrong on that thesis? Always have a point of invalidation. Well, for us, it's very simple. We don't want that. If the dollar goes on and breaks this high, then you're still in an uptrend and you're putting in a higher high. So that's where we pivot. And then, of course, you've got lots of companies. We're going to see how this affects things. Really, that's all I've got for you guys. You know, we right now we're getting really good signs that you are running into a bit of wicks here. You may want to take a bit of a rest. It could even be a sharp rest at resistance. But you could be looking at the next leg for crypto here. And altcoins are going to start to catch up and overperform. And we've actually done a whole analysis on the market cap of others, which I've not seen anybody else cover. If you want more of a deep dive on that, please do consider becoming a Patreon. Let's see what happens. On that note, I'm going to love and leave you. If you've enjoyed this content, like is appreciated, so is a comment. And I will see you all in the next YouTube video. Thanks a lot for watching, guys. See you in the next one. Don't forget to go and check out allincrypto.com and give me a follow on Twitter @RealAllinCrypto, and we'll catch you in the next. Thanks for watching. See you in the next.